Chapter 5 Accounting Ratio and Analysis. The financial statement analysis assists to understand financial statement of the business entity easily. Due to this simplicity, different stakeholders find it very convenient to make their investment decision. In this context, comparative statement and common size statement information is obtained in the previous chapter, and ratio analysis is included as another tool of financial analysis, and ratio analysis is a traditional and widely used tool. Here is the classification of ratio, which is divided into traditional classification and the functional classification. In traditional classification, it is divided into the ratio of trading and P&L account, ratio of balance sheet, and composite ratio. In this chapter, we'll learn much about the functional classification, where we'll check with the profitability ratio, liquidity ratio, solvency ratio, and efficiency activity ratio, which will be divided into gross profit ratio. For profitability, it will turn to the gross profit ratio, operating profit ratio, net profit ratio, whereas in liquidity ratio, current ratio and liquid ratio will learn. Solvency ratio, debt equity ratio, total debt asset debt ratio, proprietary ratio, and interest coverage ratio. In efficiency activity ratio, stock turnover, working capital turnover, debtor turnover, and creditor turnover. Now, in this 2020, this one of these ratio have been ignored in your syllabus. The remaining we are going to learn in this chapter. Here you will find with the formula. First, we'll learn about the profitability ratio, where we'll learn this four ratios formula. Here you can see the gross profit ratio. Formula is gross profit divided by total net sales into 100, for which for finding gross profit we have to take total sales minus cost of goods sold. Now this each and every formula you are going to write down in your notebook. Moving to the next, to find out the total sales, there are two formula. One, that total cash sales plus total credit sales, and another one is cost of goods sold plus gross profit. For cost of goods sold, cost of raw material consumed plus wages plus factory expense. Another one is sales minus gross profit, and the last one is sales plus gross loss. And to find the net sales, it is sales minus sales return. So this is the part of the gross profit rate. To find out gross profit ratio, another one is the operating ratio, where cost of goods sold plus operating expense divided by net sales into 100, you will get operating ratio. Operating profit ratio, for operating profit divided by net sales into 100, or take 100% minus operating ratio. For the net profit ratio, net profit after tax, remember this, after tax divided by net sales into 100, where here is the formula for finding operating profit is also given. Moving to the next, where the second part is the liquidity ratio, where we'll learn about the current ratio and about the liquid ratio. The current ratio formula is very simple, just a current asset divided by current liability. But here is most important is to what is included in the current asset. Here only the current investment, cash and cash equipment, stock excluding loose tools, and trade receivable, where bills payable and debtors are included, but debtors should get minus with the bad debt reserve. Then short-term lending and advance, paid in advance expenses, and outstanding income, which is included in the current asset. Whereas in current liability, short-term borrowing, short-term provision, due but not paid liability and interest, outstanding expense. Here you can bifurcate. Here it comes income, and here outstanding expense, received in advance installment, interest payable on long-term liability, and uncalled dividend. Here one more formula is included, but in other it is asked for the working capital, but working capital is easily found out by taking current asset minus current liability. You will get working capital. Here it is not needable, but in the further you will find it's needable to find for working capital. Another formula for the liquid ratio is liquid asset divided by current liability. There is the only difference in liquid asset that we can include the current asset but get minus with the stock and the expenses paid in advance. Current liability is same as the what we have done before for the current ratio. Next is the efficiency activity ratio. First one is the stock turnover. The formula is cost of goods sold divided by average stock. This is the same formula which I have given for at the part of gross profit, and the same is over here. One more formula is included here. This formula is same as the first one. The only thing is opening stock plus purchase related expense minus closing stock. And to find out, as you can see in the stock turnover, average stock is also asked. For average stock, just to take opening stock plus closing stock divided by 2, you will get average stock. Here comes working capital turnover, where comes the sale or the cost of goods sold divided by working capital, where the total sales which is given at the first formula of gross profit, the same is continue over here, and the working capital which I shown you here, the same it is. Next is the debtor turnover ratio. Have to take the credit sales divided by the average trade receivable. For credit sales it is easy, just to take total sales minus cash sales, you will get credit sales. And for the average trade receivable, that opening trade receivable, that is opening of debtors and bills receivable plus closing of debtors and bills receivable divided by 2, that is average trade receivable. And in the debtors turnover, it will be asked for the collection period, that within a month or a week or a day. That time you have to take for the month. That in a 1 year we have 12 months in a week. In a 1 year we have 52 weeks and days are 365. Divided by debtor turnover, that from that you will get collection period. Same for the creditor turnover ratio. The only difference is here we have to take credit purchase, and here average trade payable. In average trade payable, here it is written that opening trade payable plus closing trade payable. That means opening of creditor plus bills payable plus closing of creditor and plus bills payable divided by 2. Here also the collection period is same. For the month 12, for a week 52, and for the days 365. So this is the most important part of this chapter. First write it down, this formula. You can take a snapshot and then write it down. Now we'll start with the exercise solution. Here we start with the first question, that is determine the gross profit ratio. The 3 points are given to find out the gross profit ratio on your page number 246. First one, where the information is given sales of 10 lakh and the gross profit 3 lakh. Here I have the information. Here I wrote to find out the gross profit ratio. The formula is gross profit divided by net sales into 100. As per the information given above, that is 3 lakh of gross profit divided by 10 lakh of net sales into 100, you will get 30%. Next, sales is 15 lakh and cost of goods sold is given 12 lakh. Now here to find out the thing which has to be find out, that I wrote. Now here I don't have any informations of gross profit. So first I will find out gross profit as per the information given in the question. Gross profit is equal to sales minus cost of goods sold. Sales value is 12 lakh minus cost of goods, sales is 15 lakh and the cost of goods sold is 12 lakh. So here comes 3 lakh. So here we got the value of gross profit. Now I can go to the formula to write down 3 lakh of gross profit divided by net sales, that is 15 lakh into 100. Here I got 20%. Moving to the next question. Sales 20 lakh, opening stock, purchase, sales written, closing stock and purchase expenses are given. Now as per the information, first I put on with the trading account, where I wrote where the information comes. Opening stock comes at the trading account debit side with the amount 2,50,000. Purchase is given 12 lakh. Purchase related expenses 50,000. Sales is given 20 lakh minus sales return. Here I got the value 18 lakh. Closing stock is given 3 lakh 50,000. Now if I make a total of it, this one is comparatively more. Here is the total. This side it is 20, credit side it is 21 lakh 50,000, whereas at the debit side it is 15 lakh. If I get them minus, I'll get the difference of 6 lakh 50,000, and that's gross profit. So we start with the gross profit, which we found just now, 6 lakh 50,000. Divide by sales, that is 18 lakh. Sales minus sales written, 18 lakh into 100. Here we got 36.11%. Moving to the next question, 5th and 6th, which have been exempted for this year. Moving to the 7th question, where we have to go back to the question number 5 and 6, because we have to find out net profit ratio from the information given from question number 5 and 6. So let's take all the information. You can see non-operating other expense, depreciation, administrative expense, sales, tax rate, income of interest, dividends, sales expense, cost of goods sold, financial expense. So these all are the expense. You can see it is similar to the statement of profit and loss. So here is the statement of profit and loss I'm ready with, where we are going to find out the net profit ratio from the question number 5. So let's pick it up, all the information. Non-operating other expenses, which I will include in the non-operating other expense, 35,000. Next is depreciation, 48,000. Next, administrative expense, 75,000. Next, sales, 6 lakh. Next is tax rate is 30%, which I have already wrote. Income of interest dividend, 45,000. That is, I will include in other income. Sales expense, 52,000. That also I am going to keep over here. Sales expense, 52,000. Cost of goods sold, 3,25,000. Financial expense, 85,000. So here I put on with the incomes I keep over here. The third is 6,45,000, where if you make the total of these expenses, 6,20,000, and if I get them minus, the profit before tax is 25,000, and remove 30% of it, you will find 7,500, and get them minus 25,000 minus 7,500, the value remains 17,500. Next, now we'll put the value. Profit after tax was 17,500. Net sales is 6 lakh. Multiply by 100. Remove the calculation, you will get 2.92%. Same, continuing with the 7th question, where we have to calculate net profit as per the information given in the question number 6. See, I kept this thing. I put space for the expenses. So let's start with the sales, 39 lakh. Next is cost of good consumed, 25. Next is sales expense, 75,000. Loss due to exceeding, that is 40,000. Factory expense, 50,000. Wages, 2 lakh. Administrative expense, 1,75,000. There are some more interest on loan which will be counted as a financial expense. I am keeping here as I don't have a space. Interest on loan 60,000. Dividend received on investment, that is the other, will include it as an income. So here we are ready with the question. So here is the total is 40 lakh, whereas the total of expenses 31 lakh. If I get a minus, the difference remove 9 lakh, profit before tax. 30% of 9 lakh, that is 2,70,000. Get them minus, you will get 6,30,000. Here is the formula. Profit after tax is 6,30,000. Net sales 39 lakh into 100. Here we find 16.15%. Next question number 8. From the following information, calculate current ratio and the liquid ratio. As you can see, the information: stock, debtor, cash and cash equipment. Don't take fund. Short-term loan, bills receivable, bad debt reserve, expense paid in advance, creditors and outstanding expense. Now out of this, first we'll calculate current ratio. For current ratio, let's mark it out what we want. For the current asset, that is stock, debtors which will get minus with the bad debt reserve, cash and cash equipment, bills receivable we want, and the paid in advance expenses. This will be counted as an current asset, but in the current liability we'll take, I'm putting another mark for this, bills payable, then short-term loan, creditors and outstanding expense. This will be counted as an liability. So the remaining, only the thing, this will count as a fixed asset, so don't take it furniture. Debtors get minus with the bad debt reserve. So by looking at this information, here is the solution. Current asset, I took one by one from the question. That is stock 3 lakh, debtors 2,50,000, get minus with the bad debt reserve of 20,000. It will become 2,30,000. Cash and cash equipment, bills receivable, paid in advance, expense, that is 7,85,000. Take it as for the current asset. Next is for the current liability, bills payable, short-term loan, creditors and outstanding expense. Here the total is 3,50,000. Answer comes with the count as in turnover. You have to keep it as in S/1. Moving to the next with the liquid ratio, we formula is liquid asset divided by current liability. The current liability we already have, that is 3,50,000, and liquid asset will get minus with the stock. So here is the current asset minus stock minus the paid in advance expenses, that is 60,000. So after getting it minus, value remains 4,25,000. So we'll take it over here, 4,50,000. Get them divide, you will get the answer 1.21:1. I shown the formula first and then to find out whatever is missing in the formula. Moving to the next question, that is the 9th, but 9, 10, 11, 12 and 13 has been removed. Even the 14. Directly we'll move to the question number 15, removed from your syllabus. So taking question number 15, calculate stock turnover ratio from the following information of L Company Limited. Now for the stock turnover ratio, here is the formula: cost of goods sold divided by average stock. Now let's see what information is given in the question. Formula: cost of goods sold. Now here you can see the cost of goods sold is not given. For average stock, opening stock plus closing stock divided by 2 will be done. Gross profit rate is given 30% and the sales is given 30 lakh. Now from this information, first we will take out the gross profit, that is sales into 30%. 30% of sales, it will be 9 lakh. From this, cost of goods sold will be found. Sales 30 lakh minus the gross profit 9 lakh Here the answer is 21 lakh we found in the cost of goods sold. So let's first keep it 21 lakh. Divide by average stock. For average stock, here we have the information 3,50,000 and 2,50,000. 3,50,000 for opening stock plus 2,50,000 for closing stock divided by 2. So here we will get 3 lakh. Take this 3 lakh to the average stock for the formula. After you calculate, you will get it is 7 times turnover for the stock turnover. Moving to the next question number 16. Again calculate stock turnover ratio from the following information. Opening stock we can see and the closing stock for the average stock. Then the remaining information is sales, purchase expense, purchase and the wages. Here we can use the formula of cost of goods sold, that is opening stock plus purchase related expense minus closing stock. So taking from the textbook information, 2 lakh of opening stock plus purchase of 22 lakh plus the purchase related expense, that is 1 lakh, also counted wages as a purchase related 2,50,000 and get minus with the closing stock 1,50,000. Here value comes 26 lakh. So let's take cost of goods sold as a 26 lakh. Divide by average stock. For average stock, we'll take opening stock from the information is 2 lakh plus closing stock, that is 1,50,000, divide by 2, that is 3,50,000 divide by 2, you will get 1,75,000. Take the information to the formula. Here you will find 14.86 times. That's a turnover times. 19th one, calculate working capital turnover ratio based on sales and the cost of goods sold. So two separately we'll do. From the following information. In information, cost of goods sold is given, non-current asset and liability, current asset and liability and the gross profit. So here is the formula of working capital turnover ratio is sales divided by working capital. Now as you can see in the information, sales is not given but cost of goods sold and the gross profit is given. So here first we'll take a value of cost of goods sold is 22 lakh plus the gross profit 8 lakh. Here total comes 40 lakh. Here we found sales. So first I'll keeping the value of sales 40 lakh. Now for the working capital, the formula which I told you before, that is current asset minus current liability. Here is the value of current asset is 5 lakh minus current liability. Here the value remain 2 lakh. Keep into the, here comes answer with a 20 times turnover at the base of sales. Here comes at the next with the based on sales and the based on cost of goods sold. The sales divided by working capital, which we have already done here. And now based on the cost of goods sold, first we'll take cost of goods sold as a 32 lakh divide by working capital of 2 lakh. If you divide it, you will get 16 times. So got it? For here you can write down based on sale it is 20 times. Next is the question number 18. From the following information, B Company Limited calculate debtors turnover and collected period in time. What will be the answer if collected period is calculated in terms of week and month and assume 360 days? Means 3 times we are going to find out for the week, for the month and the days as well. Let's see the information. Total sales is given. Opening debtor, opening bills receivable, opening creditors, credit sales, closing debtors, closing bills receivable, closing creditors. Now, here they told you to find out debtor turnover. And the formula of debtor turnover is credit sales divided by average trade receivable. Credit sales is directly given in the question, so we can write it down 3,65,000. Whereas to find out an average trade receivable, we'll take a opening of debtor plus opening of bills receivable. Opening of debtor is 70,000 plus opening of bills receivable 20,000 plus closing of debtor 50,000 and closing of bills receivable 6,000. 50,000 plus 6,000. Then at the end divide by 2. Here is the solution. After putting value, we found 73,000 for average trade receivable. That is 73,000 for average trade receivable, and credit sales which was given in the question, that is 3,65,000. If you make a calculation of this, you will get 5 times. Now as per the question, here the collection period, where for the days it is given in the question, take 360 days, week it would be 52, and for the month 12, and debtors turnover will keep, that is 5 times 52, again divide by 5, 12 divide by 5. Now we'll start finding the value of this. Here comes 72 days, here 10.4 weeks, and here comes 2.4 months. So that would be debtors turnover. Moving to the next question, number 19. From the following information of C Company Limited, calculate creditor turnover and payment period in days. What will be the answer if the payment period is calculated in terms of week and the month, and also given the days of, it has to be calculated 360. Now let's see what information is given. In the opening balance of creditors and bills payable is given. We are going to find out creditor turnover, so no need to take this too. Next, closing balance of creditors and bills payable is given. Here credit sales, cash sales, total purchase and cash purchase is given. But to find out the creditor turnover, we need credit purchase. So we'll take total purchase minus cash purchase, which is given in the question, that is 6 lakh minus 2,40,000 you will get 3,60,000. That is credit purchase. So here I am writing 3,60,000 as a credit purchase. And for average trade payable, take a opening of creditors and bills payable and the closing of creditors and bills payable. So here I am taking 45,000 of creditor opening plus 15,000 bills payable opening plus the closing of creditor 40,000 plus bills payable, that is 20,000, divide by 2. Here we'll get 60,000 plus here also 60,000, divide by 2 comes to 1,20,000, and here the answer is 60,000 of average trade payable. So here I kept 60,000, and here if we calculate, it comes with the 6 times of creditor turnover. For the collection period, here I wrote the day, week and the month. So we'll put value which we found just now, that is 6 times. For the days, we get 60 days. For week comes 8.67 week, and for the month we'll get 2 months. So here we end up with the 19th question as well as the chapter